if you're going to add 50% more homes into a supply chain that is already constrained at the raw material level, what the hell do you think happens? We
Right.
get the inflation that would come out of this would be ungodly.
What is up, one rental at a time? I'm asking the questions today, so watch out. No, Michael, this is your sweet spot. So, economic plan gets rolled out by Kamala Harris,
Mhm.
and not to be political one way or on the other on this, but I'm interested to hear what your thoughts are because one of the lead things that she's proposing is giving $25,000 to first-time home buyers because houses are unaffordable. You are the expert in real estate. I am not. Let me defer to you because I have thoughts, but why don't you shape up some of my thoughts?
Actually, when I looked at her plan, and I've looked at it several different ways, there are really two anchors. And again, it's economic 101, supply and demand. And we're going to talk about both. Obviously, you've keyed off of demand, which frankly, I don't think we need any help with. But no doubt that 25,000, and again, you got to be clear, it's an average of
Right.
$25,000. It's
Right.
not a
Well put.
cap,
Well put.
right? So again, there will be people above and below that number. So we haven't seen the details, but you got to watch vocabulary. It's an average of $25,000. So on the demand side, it's just not what we need. Again, if you look at the bifurcated housing market, yes, inventory is up 40%, but we are not up 40% on the entry level housing, right?
Right.
Stuff below the median. In fact, by some accounts, we're down on that level. So if you just look at the mass market inventory up 40%, we need more demand, transactions down, probably going to cycle low. People look at this and probably say, hey, great things. But when you scratch it just an inch and you realize that the low end, the entry level home is like a unicorn. It's like a unicorn holding a four-leaf clover on a rainbow. I mean, it's like they don't exist. And to just unleash demand at that is it's going to lead to bad habits. And again, in California, we had something called California Dream. Now I'm referring to California Dream 1.0. They've already rolled out 2.0. And basically what happened if you talk to agents and brokers is that unleashing of free money
Yep.
caused a lot of people to dive in, and you saw bidding wars everywhere on all entry level housing to an unhealthy level.
Right.
And so that would occur here. The second thing to really talk about when you talk about demand and supply is what is elastic and what is inelastic.
Fair.
Demand is the most elastic thing. It will snap quickly,
Yep.
and it could be rolled out with the sign of a pen, right?
Yep.
Executive order or whatever, and demand is unleashed. Now let's go to supply. And we're going to talk about 3 million units that she wants to build, which I think is a wonderful thing. We are supply constrained. Anybody talking about building more homes, you got my attention. But let's just again do real math. She's talking about 3 million homes in 4 years, which again equates to 750,000 homes a year. I unfortunately need to remind people that during the pandemic, there was a moment in time where builders really ramped up production. And if people don't realize, a home is nothing more than a collection of commodities. And the greatest example that was reported on was lumber. Lumber went from 480 a board foot or whatever they call that to, I don't know, 1,000, 1,500.
1,200.
Yeah, it's just some stupid number, right? And oh, by the way, if you are actually paying attention to the lumber market like I am via the uneducated economist, lumber is at a cycle low. There are now mill curtailments. There are shortages already in the supply chain. So, and then the last thing on supply is builders today are building about, I don't know, let's call it 1,200,000 run rate homes. If you're going to suddenly add 750,000 homes, that's about 40 or 50% more homes. So if you're going to add 50% more homes into a supply chain that is already constrained at the raw material level, what the hell do you think happens? We
Right.
get the inflation that would come out of this would be ungodly.
Right.
So again, I think it's a feel good message. I do like some of the things that she talked about in her plan, like creating this $40 billion, I don't know, fund at the local level. I think all buildings should be at the local level, not even the state or certainly not the federal level. I think there's some goodness there. But if we're really going to talk about economics 101, this plan will ignite asset inflation and consumer inflation. I estimated that on the asset side, it would take home prices up 10 to 15% in 18 months. It's just math. And I think it could possibly reignite consumer inflation. Because again, the other thing you got to remember is not only lumber and windows and doors and all of that. Where are you going to get the labor
Washers,
from?
dryers. Yeah.
Yeah,
Well, okay. Yeah.
labor. No,
Yeah.
we are short trades. We don't have electricians and plumbers and roofers and painters, and you're just going to have bidding wars for
Yep.
talent.
Yep.
So this could be, I mean, if it was rolled out, and again, you got to get through Congress and all those things, but if it was rolled out, we would have inflation 2.0, and we may have to Paul Volcker this thing to break it. So I hope it doesn't go through.
Now, I'm curious on one of the numbers that you threw out there. You talked about inventories up 40%.
Yep.
Is that inventories off of last year level, or is that
Correct.
inventories off of trend level from 2019?
No, that was absolutely off last level. So if you go back to 2019, we're down about 28 to 30%, depending on what you look at.
That's the natural market that's not manipulated by
Correct.
helicopter money out of the Fed, right? So we're
Yeah.
down 28 to 30% on inventory on trend pre-pandemic. They're down, it's positive 40% after a absolute
low
run on houses, right?
Right.
So yeah, they're up, but they're up modestly from last year, and relative to pre-pandemic, they're down significantly. So we're inventory constrained, no doubt about it.
No doubt about it. Well, let me give you one of the most interesting numbers I've uncovered in the last 7 days. So my team in Fresno, California, obviously it's my home market. They gave me the number for median home price sold and median home price listed.
Okay.
Sold.
Now you're talking for
active.
Local Fresno.
Very much my buy box. Okay.
Yep.
So Fresno's median home price has been trending right around 440,000. I think it was 442. Let's call it 440, which is where it's been for 6 months. So that's crazy.
That's roughly national average for the record. The national average is a little bit lower than that, but $20,000, $30,000 less than that.
But as of last week, now again, data could change. I got this from my team in Fresno. This is hard to say. The median home price of active listings, single family homes, 570. What the hell does that tell you? That means we're stacking above the median, right? And we have nothing below the median. That's what that means.
Correct. And the first-time home buyer is stuck in a situation. I look at this. So I did a video on this on my social media on Saturday, 2 like wild reviews. And so I look at it from kind of two angles. One, I absolutely feel for the first-time home buyer.
Oh, of course.
The first-time home buyer's in a terrible situation, and it's not their fault, right? I look at the government, I point the finger at the government, and I say, listen, there's kind of 2 things that cause this. You look back to 2008, and builders overbuilt, and then what happened is it came crashing down. Banks overlent, and so like happens in every economic cycle, the pendulum swings massively the other direction. They increase regulation on banks, on builders, and guess what? We underbuild. There's your supply problem.
For a decade.
No supply. For a decade, exactly right. And then from a demand side perspective, that's helicopter money coming from the Fed during COVID. So when you just dump money on top of an economy, you're going to see people buying up assets. And so with a lack of supply and then a massive demand increase, none of which are the first-time home buyer's problem. Or no, they are the problem, not the fault, rather.
Right.
Certainly their problem. They're faced with this situation. I just think the attack on it is the wrong attack. I agree with you and something that you said that, listen, let's build out inventory. Let's incentivize the build on the back end, and therefore there will be opportunities for people to deploy money at reasonable levels that wasn't necessarily handed to them, because I think that creates a lot of bad habits. But let's think about the better end of this, which is the supply side, not the demand side.
Yeah, and something I've been saying for a while, you can't fix the broken housing market quickly. I mean, the unfortunate answer is this is probably 3 to 5 years in the making. You have to incent, and again, part of her plan, again, I give her credit where credit's due. Part of her plan was to incent builders to build affordable homes. That's awesome. Those are the right things, but it's not something that snaps. It's years in the making. But there are some things in that the supply side I am a fan of, but I just want people to realize that if we don't take care of the supply chain, lumber, windows, doors, refrigerators, labor, you're going to get inflation 2.0.
I just
It's
got
going to take more
a
thought.
couple FU prices. I need a deck that's redone at my house. And people came over and they started throwing numbers. And granted, they are talking to a very uneducated person on what it should cost. So
Right.
the first guy comes over, throws a number, and I'm like, okay, this seems high to me, but I don't know. Let me get a couple others. I got two others that were right in line with his. And then I got someone that a buddy had referred. He's like, dude, this guy, I don't know. He's cheaper than everybody else. He did good work at my house. He came in at 50%. So I got three FU numbers and then one guy that's like, hey, I want the work. I'll
Right.
do it. And so that's the reality of it. But had he not been there, I'd be paying double what I need to pay to redo my deck, which redoing a decking doesn't take skilled labor. Pull up
No.
the boards. It's only the top. It's not the undercarriage. Pull up the
Yeah.
boards, put new ones down. That's it.
Yeah. And again, there's a setup for the spring housing market to reignite inflation. Right now, again, according to the uneducated economists, there are mill curtailments going on left, right, and center because they can't make any money at this level. So what do? You shut them down. You
Yep.
send people home.
Yep.
There are already shorted. Dude, there are shortages happening in the lumber market. This is kindling. And if you unleash some super demand generating thing, oh, I can only imagine what happens.
Yeah, instead, let's focus our policy on, hey, how do we keep those people producing by maybe a constant drip of new houses getting
Yeah.
built, and that's the other side of it. And it
Yeah.
and honestly, the problem there is, as I see it, is that's harder policy to
Of course it
creatively
is.
come up with and put to work. Otherwise, writing a check and putting the printer press on and saying, here you go, that's easy. And you know what that also does? And this is maybe political, but that's also the first time home buyer going like, hey, I'm going to get 25, 30 grand, 15
Yeah.
grand.
I
And
know
just
who
like,
I'm voting for. Yeah,
I'm up
exactly.
for that. Yeah.
Yeah. 4 years ago it was student loans. Now it's, first time. I mean, it's certainly feels like buying votes to me, but I think at the end of the day, there are some things to like about the plan and some things not to like. In reality, this would have to go through Congress, at worst, be negotiated and come out the other side. I certainly hope it focuses on supply versus free money. We already know what happens with helicopter money. I don't know why we don't learn our lessons, but wow, wow.
Yeah.
Taylor, where
Totally
can
agree.
people find you?
Yeah. Find us at Life Goal Investments is our handle. We're on both Instagram and TikTok, daily videos.
There you go, buddy. Thanks again.
Thank you.